Hello. This presentation is offered as an in-depth look at one of the most drastic tax changes ever attempted in Missouri. After considering these facts, please vote on or before August 4th. The ballot language was changed by the courts a few days after Governor Mike Kehoe placed the amendment on the primary ballot. It now reads, shall the Missouri Constitution require legislative phase-out of the individual state income tax based on revenue growth and authorize the expansion of sales and use taxes, curtail constitutional limits on taxing goods and services, and require local tax rate cuts without reducing school funding if local sales tax revenues increase. Some quick notes. Voters approved the current limits on taxing and goods and services in 2016. The carve-out for school funds is only for local taxes. No state funding is mentioned. State funding is required by the section of the Constitution that created public schools. The corporate income tax would continue. Missouri's corporate tax rate is the second lowest in the country. The legislature has 5 years to enact the changes. Should we expect a political hotbed in the state legislature for special interest? The amendment calls for completion of the swap in 2032, but the income tax phase-out can continue beyond that. Representative Bishop Davidson, the amendment's author, predicted publicly that 2036 is more likely. That's 10 years. The Hancock Amendment, designed to limit the growth of government by limiting funding, is repealed. Voters will not have the previously required right to vote on new sales and use taxes. Local governments, like cities, counties, and townships, must reduce sales and other taxes so as not to gain windfall revenue from the state's expansion of the sales and use tax base. The triggers are designed to keep the state's general fund revenue neutral. For every $20 million of additional general revenue, the top income tax rate would go down by 1/100%. The 4.7% tax rate would go down to 4.69%. That same reduction would be repeated for every $20 million of additional revenue until it maxed out at 1.6% each year. When the rate gets down to 1.4%, the individual income tax rate would be dropped. Because many of us use software and tax preparation services, we haven't taken a look at Missouri's tax rates for a while. Missouri has progressive marginal tax rates. That means for each increment of income, the tax rate goes up a little bit. When we get to about $9,200 a year, everyone pays the top income tax rate. Every working person in Missouri pays the top tax rate, not just the rich. What are the proponents claiming Amendment 5 will do for Missouri? Governor Kehoe believes the plan will attract jobs and investment and give people more take-home pay. Missouri Promise ads scream that Missouri is losing out to other states without individual income taxes. Missouri's population growth averaged less than 1% annually for more than a century. Young Missourians are leaving. 25% of Missourians are on Medicaid. Missouri Promise claims taxpayers will save thousands of dollars a year. A $60,000 household would save about $2,400 a year. While this is true, it does not say that the sales and use tax increase is left out. Another Missouri promise claim is that big tech is making millions on porn and gambling. The big tech will pay more taxes because a loophole is closed. The truth is that corporate taxes are not changing. Only LLCs, partnerships, and S corporations would benefit. Small media companies can be LLCs or S corporations. Larger companies, like holding companies, will continue to be taxed. And sales and use taxes paid by Missourians likely would be added to the charges for those buying porn, gambling, and regular streaming services. Yes, a tax revenue increase, but it won't be paid by big tech. It's claimed that Missouri is competing against 9 states with no individual income tax. These are Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. South Dakota and Tennessee are in bold because Representative Davidson says these most closely resemble the Missouri situation. 4 of these states never have had an individual income tax. The others ended them more than 40 years ago. Washington shouldn't even be listed. The state Supreme Court there overturned its income tax in 1933, saying it was unconstitutional. The court ruled that income was property. Therefore, Washington taxes income under its property tax. 3 questions need to be asked to more fully analyze the proposed amendment. Is Missouri's economy in an emergency that requires drastic action? Have Missouri's economic issues been accurately defined? Does the proposed tax swap amendment adequately address Missouri's economic issues? How is Missouri's economy measured? Gross domestic product per capita. It's the standard economic measure for our standard of living. It measures our well-being. Missouri's GDP increased 1.3% from 24 to 25. That's below the national rate increase of 2.1%. This graph compares Missouri's gross domestic product per capita with that of the 9 states without individual income taxes. Missouri is lower. This is a graph of the income per capita for the 9 states without individual income taxes in Missouri. Missouri is lower. It's possible that the increase in the state minimum wage that was enacted in January of this year will pull that number up when we get statistics next year. This is a graph of the minimum wage per state. Missouri, at $15 an hour, is higher than most states. That went into effect January 1 of this year because of the law we passed in 2024. Also, the average wage paid workers in each state is significant. Missouri, in yellow, runs about middle of the road for the 9 states without individual income taxes. Also, the cost of living per state is important. Missouri has the lowest cost of living of the 9 states without individual income taxes. Governor Kehoe hopes that Amendment 5 and the elimination of the individual income tax will increase businesses and industries in coming to Missouri. The Missouri Chamber is the state's leading proponent for commerce and industry. And on March 24th, the Chamber came out with a statement that Missouri had the fastest job growth rate in the United States in 2025. Employment was expanded by 1.7%. The state added almost 53,000 jobs between December 24 and 25. Here's a quote. It's a clear signal Missouri's economy has strengthened and expanded. This chart shows how Missouri's job growth rate compares to the other 9 states without individual income taxes. That's our look at Missouri's economy. Let's look at whether the economic issues for Missouri have been defined. Citizens create or allow all governments. The citizens in the U.S. colonies created this country. The citizens of Missouri created this state and applied for statehood. Even monarchies and dictatorships are allowed by their citizens. If these governments stray too far from seeing to the needs of its people, citizens take action. Citizens always are responsible for their governments. The governments always are responsible to their citizens. What do businesses and industries look for when choosing a location? And does Missouri compete in these areas? Cost of investment, employee pool and the quality of those employees, utilities, infrastructure, tax incentives, and structure of the tax system. Let's take a look at Idaho and Missouri. Idaho has the strongest state growth in the nation. Its GDP is almost 8 times that of Missouri in the last few years. Its utilities are strong with 81% of energy from renewable resources. 200 people a day are moving to Idaho. The workforce is considered progressive. It is not one of the 9 states without an individual income tax. The perceptions for Missouri. It has a low cost of doing business because of low real estate prices and utility rates. Only 12 to 14% of our energy comes from renewable resources. 70 to 74 people a day move to Missouri. It's also seen as lacking workforce development. Broadband is weak, logistics are lacking, and we have transportation issues. Missouri's unemployment rate for May was 3.8%. The national rate was 4.3%. So Missouri does not have a large number of unemployed persons. No statewide emergency need for jobs. This chart shows the May 2026 unemployment rate for the 9 states without individual income taxes, Missouri, and the national average. Missouri is below the national average, and it is below 5 other states. The Missouri Chamber did a Gallup poll in 2015, and they used the results to create Plan 2030. That is on their website, along with updates on what has been accomplished since then. The results of that Gallup poll still are worth studying. Only 10% believe that Missouri's tax environment is their biggest obstacle to growth. The national figure is 7%. The inconsistency of Missouri's tax policy is perceived as a major issue. 80% of business owners do not believe state policies are stable enough for year-to-year planning. Since this survey, the Missouri corporate rate has been cut, and the fully activated cut went into effect in 2020. and that gave Missouri the second lowest corporate tax rate in the nation. The Chamber's Gallup survey also revealed that business owners believe that Missouri does not attract top talent, nor does it retain it. 85% say schools are not preparing students for the workforce, and 58% say colleges are not preparing students for the workforce. Since this poll was done, many large and medium-sized districts have started preparedness programs. Examples are the academies at Belton High School and LEAD in Raymore Peculiar School District. But what can smaller rural districts afford to do? Also, a consideration for the preparation of Missouri's workforce is the state's investment in public schools. We are ranked 48th in the nation. This ranking is readily available to businesses and industry scouting locations. This chart shows the sources of school funding in each of the 9 states without individual income taxes and Missouri. Missouri is second highest in local funding and second lowest in state funding. Local funding shows how much Missouri citizens value our schools. Spending per student is a common way to compare schools. 4 states spend more than Missouri. 5 states spend less. Perhaps the most valuable comparison is high school graduation rates. Missouri is higher than the national average. And when compared to the other 9 states without income taxes, Missouri would be 4th. That shows the commitment Missourians have through the local taxes. Now we need to look at Amendment 5 and whether it truly improves our lives, which should be the goal of government. Let's look at the rest of what Amendment 5 does, and that is sales and use tax increases. These are regressive taxes, particularly if groceries are taxed. Revenue from sales taxes will experience volatility during an economic downturn because people have less money to spend. Representative Davison says that income taxes are volatile during economic downturns because people lose jobs. Here's the truth. All taxes are volatile during economic downturns. The cost of implementation will be passed on to consumers. Missouri will lose sales taxes to states with lower sales tax rates. The legislature has 5 years to implement these changes. That's 5 years of volatility for our economy. And special interest groups will have a field day. So how much will the state sales tax rate need to go up? If use taxes are not implemented, the rate would have to go up 7.7%. That would put the rate at 10.7%, up from the current 3% for the General Revenue Fund. Combined with local taxes and other state taxes like that for the Missouri Department of Conservation, the average would be somewhere around 16%. A Missourian making $65,400 a year would face a $535 net tax increase. This is because the income tax savings would be less than the sales and use taxes collected. Also, Social Security recipients, pensioners, and active duty military members will have a steeper increase. Here is a look at the 9 states without individual income taxes and how much their state sales taxes are. Alaska has no state sales tax. It makes its money from oil and natural resource taxes. New Hampshire opts to tax businesses. What could mitigate the sales tax increase? Use taxes. Taxes on everything from daycare to healthcare. While sales taxes might not go as high, this could be a whole new category of taxation. Economic growth. While the arrival of new businesses and industries is what is hoped for, there's also a possibility that the state's economy will become so volatile that businesses and industries could sit out the 5 years of the transition. The lawmakers who wrote and sponsored the amendment know all these numbers, all these statistics. So the question becomes, why would they promote such a drastic tax swap that could upset Missouri's economy for 5 years or more without knowing whether Missourians' standard of living would improve? Here's a possible answer. Project 2025's federal income tax plan. It would reduce the 7 federal income tax brackets to 2. Individuals will pay 15% on income under $168,000 a year, or individuals will pay 30% on income more than $168,000 a year. And corporate tax rates would decrease from 21% to 18%. Could it be that they are hoping that by eliminating the state income tax first, Missourians would be able to adjust over time to be able to afford the federal tax change? So that Missouri can be better for us, let's look at what makes a good tax system. The Association of Chartered Certified Accountants is an international organization in 180 countries. They deal with everything from capitalism to socialism to communism, from monarchies to dictatorships to parliamentarian forms of government. They list 12 things, 4 have been chosen. Equality. Contribute to their ability to pay with progressive income taxes and wealth-based levies. Simplicity reduces administrative burdens and costs. Certainty and predictability allow taxpayers, including businesses and industries, to plan finances. Openness and transparency build trust between government and citizens by clarifying tax liabilities and the use of revenues. Tax burdens should be considered as a percentage of GDP. This is a map of the gross domestic product per capita in every state. The national average is 79.9 thousand. Missouri is at 71,000. We're asked to compare ourselves to Tennessee at 75,000 and South Dakota, which we don't want to be there. I also want to point out the legend at the top of the map. 25 states are in green and 25 states are in orange. This shows that the green states have the majority of the gross domestic product per capita. That is also called income inequality. Yes, there are things that can be done to improve the gross domestic product per capita who improve our standard of living. The Association of Chartered Accountants lists these things: encourage an increase in consumer spending, increase disposable income, promote consumption, promote savings and investment, boost government spending, infrastructure investments, education investments, public health and social program investments, expand state financial investments, improve productivity. Now remember that list when we look at these ratings provided by the Missouri Budget Project. Missouri is 45th in the amount of state revenue it collects per person, and 43rd in the amount of state funds it spends per person, including federal funds. So let's conclude with our 3 questions. Answer them for yourselves and vote on August 4th. Is Missouri's economy in an emergency that requires drastic action? Or, stated another way, do we need a better standard of living? 2, have Missouri's economic issues been addressed in Amendment 5? Or is Missouri truly losing to the no income tax states? Third, does the proposed tax swap solve Missouri's economic issues? Or will the tax swap improve our standard of living? Please take time to vote on or before August 4th. Thank you.